Imagine receiving a tax penalty for a company that has no sales, no profits, and did absolutely no business throughout the year. It sounds unfair, right? Well, this happened to many Nigerian business today. Every year, because they assume that if a company is dormant or exempted from paying tax, there's no obligation to file tax return. That assumption could cost you money. It could also affect your clearance statute. It could also expose your business to avoidable penalty. So before you ignore your annual tax filing obligation, watch this video to the end, okay? Because I'm going to share information that will save your business from serious compliance issue.
You are welcome to the Analytical Entrepreneur.
Welcome back to the channel. If you are a business owner, accountant, entrepreneur, business director, startup founder, or tax professional, this video is for you. One of the biggest misconceptions in tax compliance is the belief that tax liability and tax filing obligations are the same. They are not the same. Under the Nigerian Tax Act, every company, including entities granted exemption from a corporation requirement, is required to file a self-assessment return with the relevant tax authority at least once every year. And here is the interesting part. The obligations applies whether the company is liable to pay tax or not. You can see my past video on how to file NIF tax return. It applies whether a company made a profit or lost. It applies whether the company carries on business or remain dormant throughout the accounting year. And most importantly, it applies whether not the tax authority has issued notice requesting the filing. In a simple terms, you don't wait for the tax authority to remind you before you file. And the responsibility rests on the taxpayer. Why many business owners get this wrong? Let's consider a common scenario. A business owner registered a company. For one reason or another, the company never really take off. No contracts, no sales, no income, no operations. The owner then concludes, since nothing happened during this year, there's nothing to file. Unfortunately, that is where the problem begins. Tax authorities still expect annual return to be submitted even if the company has no activities. Failures to comply can lead to penalties, unnecessary assessment, compliance query, difficulty when applying for tax clearance certificate in the future. The fact that there is no business activities does not remove the filing obligations. Let me repeat, no business activity does not mean no filing obligation. What must be included in the annual return? Now, let's look at a specific document that should come with annual self-assessment return. One of the documents is Audited Financial Statements. All right, for a large company, the law expects that they prepare audited financial statements. Then another document that can also come with this self-assessment is statement of account. Now, small company by law, they are allowed to prepare statement of account. Maybe because they don't have the financial capability to engage an auditor. So as a result, small company is not required to prepare audited reports, but they may prepare statement of account. So you can see my next video, how to file CIT return on Rev360 without an audit under the new tax law. Now, the next document that can also come with self-assessment is evidence of payment of tax due. So where tax is payable, the company must provide evidence showing that the tax has been paid. The next important document that should follow self-assessment return is computation of effective tax rates. All right. So this helps the tax authority understand the actual tax burden borne by the company relative to its tax income. Why this self-assessment return matters to your business? You may be wondering, if my company has no tax to pay, why should I bother filing? The answer is simple. One, because of compliance. Then filing your annual return helps your company maintain a good compliance record. Then the next one is to protect you from avoidable penalties. It supports your future applications of tax clearance certificates. It strengthens your credibility with banks, investors, regulators, and government agencies. It prevents unpleasant surprise when tax authority eventually comes for review of your records. Then annual filing serves as a head check up for your business. The key takeaway from this video is that if you remember only one thing from this video, let it be this. Tax exemption does not mean filing exemptions. A company may not have tax to pay, but it can still have legal obligation to file annual return. So if your company is dormant, inactive, and there's no records for profits during the year, do not automatically assume that there is nothing to submit. Review your filing obligation and ensure you remain compliant. Do you need the help to determine whether your company needs audited financial statement or attested statement of accounts? Are you unsure on how to prepare your self-assessment return, calculate your effective tax rate, meet your annual filing obligations? I am here to help. I provide professional support on tax compliance, tax return, financial statement, tax clearance certificate, and regulatory filing. Contact me today for expected guidance tailored to your business. If you found this video helpful, subscribe to this channel and turn on your notifications so that you don't miss out in our weekly insight on taxation, account, business compliance, and entrepreneur. Thank you for watching, and I will see you in our next video.